Hello, everyone. I'd like to invite up my panel. We've got MaryKate coming. Yeah, everyone else is coming up. Great.
Anywhere in particular?
Nope, just have a seat. I'll kick it off with a brief introduction of the panel, and then we can pick up the theme for the day for this panel. Starting off with John, he's, as you heard from his question before, at Credit Suisse and is head of global head of sustainability. He's trained as a biologist and a lawyer, and so hopefully he'll bring some of that into the conversation. Next to his left is Sally Collins, and Sally has spent most of her career really managing forests and. Went from there, from Oregon to Washington, D.C., into more of a management role, and was one of the people running the U.S. forests. And then, as you also heard earlier, was in charge of the U.S. Office of Environmental Markets. Next to her is Olof Johansson, and he is Director of Forestry and Environment at Sveaskog. Hopefully I said that right. Okay. He also was chairman of the Forest Stewardship Council, which we've been hearing a lot about today, and also is chairman of Forest Trends, who we've also been hearing about today. And then finally, I think most of you know MaryKate Bullen, who's Associate Director of Sustainability and Communication at New Forests, and is, I think, one of the prime movers in making this whole day happen. So thank you for that as an aside. So let's jump into it. I mean, I think this is a really interesting panel to end the day on, because listening to all the different conversations and all the different panels, one of the key threads and themes going through the day really has been this idea of shared value, which includes the concept. I mean, in California, we'd often talk about the triple bottom line, environmental, social, and the community benefits, and so there's a real I think common theme that has emerged, but when you talk about shared values and you talk about that word, I think it's something that's different people have different things in their heads. So I wanted to start today by just going down each of the panelists and talking about what it means to them, and I'll sort of put John a little bit in the hot seat, coming off of David's talk. David remarked about his partners thinking he was crazy to have sustainability and shared values as something that was important equivalent to financial returns. When I think about a bank like Credit Suisse, that's not something that I think of, and I wonder if you could start by commenting on that.
Yes, one thing I will say is that there was a time not very long ago when it might have been viewed as crazy within Credit Suisse to bring up the possibility of taking a different approach to investing and to lending, and considering other factors other than a strict risk-reward analysis based on traditional criteria, likelihood of repayment, etc. But that has changed throughout the banking industry over the course of the last, I would probably say, 8 to 10 years. There has been a transformation within the banking industry, and that is very clear to those who are there now and have been part of that entire evolution. I think it's probably worth mentioning that the concept of shared value, as articulated best by Mark Kramer and Michael Porter, it's not a concept that is used, at least under that brand, in the banking industry, generally associated with consumer goods companies in particular, like Nestle, et cetera. But I think the basic essence of shared value is something that members of the banking industry have come to realize is absolutely key. No surprise to you, the bank's license to operate suffered deeply during and immediately following the financial crisis. And there has been a recognition on the part of senior managers within banks, particularly senior risk managers, that however you brand it, maintaining that social license to operate is absolutely key, and recognizing that it is not enough to deliver good results for shareholders, but to be able to tell a story where there are benefits that go beyond traditional benefits that that people recognize, even people who you would not expect to focus on sustainability as a necessary part of doing business in the banking industry today.
Before moving on, maybe I can just follow up on that. If we had the CEO of Credit Suisse in here, I mean, wouldn't they be talking about and the board, wouldn't they be talking about just maximizing profit? And there's this concept that you alluded to, which is about sort of your reputational concerns and Occupy Wall Street, sort of Main Street, Wall Street sort of stuff. But isn't that different than shared value?
Managing risk, and particularly reputational risk, in the wake of the financial crisis has become a huge part of the focus of the most senior levels within the organization. So if the CEO of Credit Suisse were here today, I actually, we have a new CEO, so I don't want to put words in his mouth, but I actually do not think he would be speaking, at least in the terms that you just used, of maximizing shareholder value, certainly not on its own. I think it would be a much more nuanced discussion of, yes, maximizing or increasing returns to shareholders, but at the same time doing so in a way that ensures that the bank maintains its ability to do business, guarantees its reputation, and is able to tell a story about the importance of banks to society, which in the last few years has frankly been underappreciated, because banks bring a huge amount of value to the economy by greasing the wheels of the economic system, and that has fallen a little bit by the wayside. And frankly, I think banks are at least in part guilty of that fact.
Well, moving on to Sally, I have been a frequent user of the U.S. forests, and there's a lot going on there, and so I'd love to hear kind of your perspective on what shared value means from a U.S. regulator and forester perspective.
Well, I think, like banking, we've gone through a lot of changes over the last 20 years, and I was fortunate enough to manage a national forest for 13 years in Oregon, right around the time that the spotted owl crisis hit. And it was a battleground all around me. It was a terribly difficult time, psychologically, as well as, people were losing jobs, mills were closing, the industry was shutting down, communities boarded up and just walked away in parts of Oregon and Washington. And so for me, living through that, I came into Washington, D.C. shortly after that. I thought, we've got to have a better way to talk about what we're doing instead of multiple use and multiple values and providing for all of these stakeholders in these communities, because we'd failed. And not only had we not done well, we were over-harvesting our forests, we were over-promising what we could deliver. The industry was shutting down and communities were suffering. People were losing jobs. Something different had to change. And it was right about that time, actually, that I met David Brand, I met Michael Jenkins, I met this whole cast of carriers, many of these people that I met through Forest Trends. And the first time I heard the term ecosystem services was from Michael Jenkins at a board meeting, and the idea to me was almost a way to introduce a new language of shared value into the whole conservation world, natural resources world, because instead of it being the economy and jobs versus the environment. It was nature provides services to people that are essential to their well-being. It turned on in the way we thought about conservation. And so in starting to kick around in this world, we started exploring, and a lot has changed. I'm very optimistic because I think it not only provided a new way to talk about shared value in conservation. So we have all these partners that now really truly believe that we care about the land, and we're trying to provide these services for the long term for all these people who depend on the forest. But it also potentially opened the door for more money for conservation. This whole idea of conservation finance, payments for environmental services, new ways to bring more people into the world of conservation. So I honestly think I have to thank David and Michael publicly because they rocked my world in terms of the way I think about conservation, and I think it's rocking obviously a lot of other people's worlds in the way we're thinking about investments. So that's a sort of short story.
Yeah, we'll hopefully have time to come back. I want to
Yeah.
probe a little deeper on that. But going to Olof, I think it'd be interesting to get your perspective on this because you are at an organization that's a government organization, but runs forests as a business, and has for many years. So I think that you'll bring maybe a different perspective of what shared value means.
Thank you, Seb. Yes, I think I will. I think I will have to be more specific to show you some examples of what I see from where I come as examples of shared value. So I represent a forest company in Sweden. We own and manage around 4 million hectares in Sweden. And to set the context a little bit more, I also want to describe that forest because it's not it's neither a natural forest like the ones we have in parts of Australia, Tasmania, and in many other parts of the world, and it's not a plantation in the sense that we have here either. So it's somewhere in between, and it's a forest that has been managed for a very long time, centuries. But the species composition is more or less natural. So that's the background. It's a cultural landscape, and more than half of the area is owned by private forest owners. And that's a background to when I give examples of what we're doing in reality in terms of nature conservation. We've set goals for environment, social concern and economy, and we like to describe our business as a sustainable business as a whole. It was such a joy listening to the description of the whys and how of sustainability earlier. I thought that is what we are trying to achieve. We've expanded on forest certification FSC certification that we obtained 15 years ago. And today, to give you some examples then, we are working on this land area base of 4 million hectares, and 20% of that area is set aside for nature conservation. Quite a large part of it is actually managed for conservation goals as well, because I said it's a cultural landscape. It's been influenced by man for a very long time. We have company eco parks, something we've invented on 5% of the land, and those are managed. Those are big landscapes, 5,000 hectares or more, that we manage for ecological outcomes, but also for people, for recreation and to experience nature. And a couple of other things then to illustrate that it's much more than nature conservation. It's about managing the forest in as optimal way as possible when it comes to sequestration of carbon dioxide, both in forests and in products. It's also a matter of providing good, safe jobs for employees, contractors, and to contribute to their education, development throughout in areas, in rural areas in Sweden where jobs are quite scarce. And that whole area, I think, is something that we have to work a lot more on to provide this connection to the local communities, which I think is absolutely key for a successful business in the long term. So those were a couple of very concrete examples, maybe, of what I see as shared value.
Thank you. Jumping over to MaryKate, I'd love for you to bring your perspective, sort of, I guess, in the New Forest context, on what shared value means. So I'll turn to you.
Sure, thanks, Seb. It was a little over a year ago, in August 2014, that for the first time, our company actually had a sustainability retreat, and we took a step back. And as you would have seen, a quarter of our company has been on the stage at some point today, and most of them mentioned sustainability or responsible forestry. These things are really core to the ethos of our company. But we felt it was time at 9 years old at that point to step back, reassess how sustainability was really integrated in our business as part of a business strategy and a driver of our business performance and our investment performance, and not just something we were doing by circumstance or happenstance or because we happen to be employees and individuals, excuse me, it's been a rough week, who are individuals who care deeply about these things. We wanted it to continue to drive New Forest forward. And at that time, we looked at the creating shared value model, which, as John mentioned, has been extensively promoted by Kramer and Porter as a business strategy, wherein a business strategy provides a solution for an environmental or a societal problem. And that creates a win-win situation where you're creating shared value, not just in the sense of co-benefits and warm fuzzies, but actually creating more of a market for yourself by being able to bring a new solution. And that's something that David Blood mentioned as one of the strategies Generation would recommend, looking for companies that provide solutions. So we took this to heart, and over the past year have been trying to define what is our shared value opportunity, what does it look like for New Forest. So we've gone through a process with board oversight, and obviously our board members are very committed to this, looking at what does it mean for our strategy. We've gone through consultation then with everyone in the company about what are environmental, social governance issues that are material and where are those opportunities. If you ask 47 people to try and define a corporate purpose, it's very, very difficult. So I now feel, after the past 6 months, pretty confident that most people won't object to the following words, that we're investing to create productive and sustainable landscapes. And there's only one throwaway word in there, which is to. Everything else is very critical to what we're doing at New Forest. We're investing, we're an investment firm. We want to create and actively add value. We don't want to have random acts of conservation or random acts of productivity increases. We're actually creating these things in productive and sustainable landscapes. And Bettina, I think, hit quite strongly on the importance of integrated landscape thinking and management earlier today. That's something we're looking very strongly at. And Zeb, this is something, as you know, we've got a lot more work to do. We want to continue to create a framework of what sustainable landscape investment means for a real assets manager like ourselves. The next big challenge is defining concrete goals, refining our measures, and how we're going to talk about performance in a way that really integrates our key landscape issues with financial performance. I firmly believe, and I think most of the company would agree, that most of the ESG things we do are actively adding to either risk management or the bottom line right now. We don't have a lot of throwaway activities in what we do. It's a very tangible asset class that we're dealing with, so you get some really tangible, clear results. And that's, where we have a bit of an opportunity to say for every asset, this is how shared value works as an investment strategy.
Great, thank you. Maybe I could jump back to Sally for a second and pose to you the question that you asked earlier, I think to Dave, about what, or I think it was to Dave, what the role of government is, and ask that to you. Given that you were on the other side of that, in creating shared value? What is the role of government? Dave talked about stable rule of law and rules that the businesses can rely on, but I'd love to hear your thoughts.
And I think often we don't imagine what happens when you don't have a good basis of a government, whether it's law, rule of law, or a good system that you can rely on that reduces risk. But beyond that, and David answered the question, you only invest in places where you can assure that the rule of law will be in place, that you know who owns the land, and that's going to be supported by all the processes in good governance of a country. But you also can do so much more. And I think what we've seen in the U.S. in the last decade, sometimes by accident, but sometimes very deliberately, we have created a suite of laws, one of which New Forest is investing in, mitigation banking, as a result of a compliance market around two big environmental laws, the Clean Water Act and the Endangered Species Act. Those two laws created demand, and that created a compliance market. That only happens if you've got laws in place that create it. In addition to that, Harris talked about this new Office of Environmental Markets that I managed. That was another law that passed. We've had a series of laws and policies that have been generating because of the buzz of this stuff. We've had a lot of these guys come into town, and so we've got a new White House policy that Harris mentioned, and I don't know if Sally Erickson, are you in this room? But Sally worked for the White House, basically managed 25% of the federal budget and her portfolio of conservation. And she's sitting in the back of the room, very humble, but she promoted this idea of environmental markets and ecosystem services quietly in the White House. So we now have a policy, as of last week, on ecosystem services being incorporated in all the work that agencies do. So government's important, and there are 100 ways that we can partner as governments with companies like New Forests, with organizations like Forest Trends, to get ideas, to generate support and help. And I think that's how you make big change, is by not doing it alone and not trying to come up with all the ideas yourself, but sharing those ideas with a whole bunch of other people who are way smarter than we are most of the time.
If I could just jump back to Olof for a minute. Can you reflect on David Blood's comments about, and David Brand's and many others around these twin goals of sustainability and profit, and in the Swedish context, and you guys are managing these forests through generations, and is that how you think about it, or is it different, or what are your thoughts?
Well, I think it was easy for me to relate to what was heard earlier. I think we have been managing the land with a philosophy that we're in there for long term, and we'll continue to do so. And I think that is key to the way you see sustainability and this concept of shared value. I also think that building the concept and acceptance of sustainability inside the company to be successful externally, again, is absolutely key. And I think the trick is to do that involving all people at all levels in the company, and that you actually have a system where you continuously, over and over again, come back to targets that are measurable and discuss them, and that you get recognized for what you're doing in these areas. Looking at financial outcomes, social outcomes, and environmental outcomes at the same time, at all levels.
And just jumping back to John, how does it actually get actualized, this concept of sustainability in a big bank like Credit Suisse? I mean, how do you, David Blood talked about sort of that integration. How do you do it?
In a number of different ways. Probably the first and biggest in terms of the chronological evolution of sustainability at Credit Suisse, because it has been a process. It started originally as a function that focused on recycling and the environmental footprint, et cetera, and then fairly quickly evolved into a risk management function. And in that sense, there has been a huge focus on developing policies for what are acceptable and what are not acceptable uses for the services and the financing that the bank provides. And there have been areas of no-go areas that have been established. One example is the prohibition against financing of any activities that result in the clearing of primary moist tropical forests. There's a more recent prohibition at Credit Suisse against financing mountaintop removal coal mining activities. But frankly, I can't help but feel that these are relatively, there's only so much that we can get out of those prohibitions, and they only go so far. The real effective results come out of collective action on the part of industry players, which is why I'm such a huge fan of the Equator Principles, which Richard Burritt mentioned earlier, and which have been around since 2003. Just recently went through their third version. I was proud to be part of the team of 5 people who drafted this new version. And it is when everyone in an industry, or all the important players in an industry, can sit at the table and look at each other and say, the legal requirements are down here, but we're going to set ourselves to a standard that is up here, and we're all going to play by the same rules so that we compete against each other on the basis of pricing and the quality of our service, and not on how low we can set the sustainability bar. That's when you make real progress.
Well, I think that's a sign. And on that note, literally, I think this discussion of people, planet, and profit has been an illuminating one, and I think it's a nice setup for Dave to bring things to a close. So please join me in thanking the panel.